Welcome back to the New Zealand Property Insights. I'm Paul Roberts.
And I'm Debbie Roberts. We're the owners of Property Apprentice, and we're here to help you navigate the New Zealand property market with facts, not just headlines.
Today, we're looking at the rental market that has been behaving completely different depending on where you look. In some cities, tenants are spoilt for choice and landlords are slashing their rents. In others, there's a desperate shortage of homes.
We'll also be discussing a scenario where homeowners are fighting the council over inaccurate flood maps. And we break down the government's brand new regulations for property managers.
It's an episode focused on regional data, protecting your cash flow and managing your risks correctly. So let's dive in.
Okay, so today we're kicking off with a tale of two cities, Wellington versus Otago with regards to rents. Fresh figures from realestate.co.nz highlight a massive divergence in the national rental market, specifically looking at the student hubs as the academic year kicks off.
We always say there's no such thing as one New Zealand property market. There's different regions, different markets, and this data proves it perfectly. Depending on where your property investment is, you are facing two entirely different realities right now. Here's the breakdown, the facts. Wellington hit a record high in January with 965 properties listed for rent. That is a massive 54.2% increase compared to the same time last year, because this oversupply, average weekly rents in the capital fell 8.9% to $659 a week. Down south, the opposite story. New rental listings in Otago dropped by 32.9% year on year, with just 339 properties listed in January. Despite the shortage of the average rent in Otago actually fell 4.1% to $519 a week.
Nationally, rental stocks up by 9.8%, and the average rent's fallen 2% to $634 a week. Some regions are seeing an absolute explosion in available rentals. Hawke's Bay rental stock, for example, skyrocketed by 115.8%, and the Wairarapa jumped by 97.3%.
So looking at Wellington first, a 54% increase in rental stock is huge. If you're a landlord in the capital right now, you have lost your leverage. You're competing with hundreds of other properties to secure a good tenant.
Exactly. And that 8.9% drop in average rent is the market reacting to that supply. As an investor, this is where you have to take your ego out of the equation. If your property manager tells you that you need to drop your asking rent on a vacant rental property by $30 a week to get a tenant, do it. Having your property sitting empty for a month while you hold out for last year's prices will cost you far more than a small weekly reduction.
Just remember, cash flow is king. This data is also a great lesson in regional diversification. If you own 3 rental properties, but they're all in Wellington, your portfolio's cash flow just took a major hit. But if you had one in Wellington, one in Canterbury, where the rents are actually up 1.2%, and one in Auckland, your risk is spread, as long as it works for your financial position.
Absolutely. The Hawke's Bay and Wairarapa figures are also really interesting. A 115% increase in stock means that landlords there need to be incredibly proactive. Ensure your property is fully healthy homes compliant. It's a legal requirement now anyway, so that's literally the least you should do. And look after your current tenants so that they're not tempted to leave. Is there something that you could do that could improve the home for your tenants and potentially increase the value in that property at the same time? Even, or potentially especially if it doesn't increase the market rent. In a market where supply is lifting rapidly, tenant retention is your best defense. And if you think your tenants aren't shopping around, you're dreaming.
So on to the next segment, which is the flood map nightmare, fighting the council, which is something that we've seen a lot more come up these days. So the second topic, we're looking at a difficult scenario for any property owner, waking up to find council has slapped a natural hazard warning on your property, which has been based on outdated data.
Or inaccurate data. I mean, it's a massive issue right now, right across the country, but specifically in parts of Auckland following Cyclone Gabriel. We're looking at the case in this example of a homeowner in Glendowie who's actively disputing her property's flood-prone designation on the council's online maps. So if we have a look at the deep dive breakdown, the property has been designated as flood-prone by Auckland Council. The owner argues that her property has never flooded, not even during Cyclone Gabriel, and for it to happen, it would require not only a 100-year flood, but also a blocked pipe in order to occur simultaneously before there's any flood risk. The council's current flood mapping is based on an aerial LIDAR, LIDAR data from 2016. The homeowner argues that this is a broad brush model that doesn't accurately reflect site-specific realities.
Working in real estate herself, the owners noted that many buyers won't even walk into an open home if there's a flood notation on the limb, as they don't understand the difference between a floodplain and a flood-prone area. So Nick Bigger, Auckland Council's head of planning, defended the LIDAR technology, but admitted it is a broad-brushed approach, and they're currently rolling out new data gathered in 2024. So even if you get a private surveyor to prove your house is safe, it wouldn't necessarily remove the flood-prone overlay entirely off council's information. The designation acts as a trigger for development assessments, but I think, it has gone a little bit too far. And I think people that are looking to sell their properties could quite easily prove by their insurance that they've never made a claim on any flood issues, because we've had plenty over the last little while. And if you've owned it long enough, you haven't had a problem. That sort of speaks to its own merits, really.
Absolutely. And it is phenomenally frustrating for vendors, especially if they're looking at selling. If a buyer pulls a limb report and sees the word flood, 90% of those buyers are going to not understand exactly what that means and run for the hills. So it could potentially decimate your buyer pool. It highlights a massive lack of education in the market. There's a huge difference between a house sitting in the bottom of a floodplain and a property that simply has an overland flow path clipping the driveway during a 1 in 100-year storm.
So, as I said, if you're a seller in this situation, you've really got to get on the front foot. Don't wait for the buyer's lawyer to find it on limb. Have a private drainage or flood report ready at the open home. You can talk about the insurance claims that there has never been one, even through Cyclone Gabriel and all of those massive ones that we had. So I think that's definitely something I'd be looking at.
And talk to your real estate agent that's selling the property for you, because forearmed is forewarned. That gives them information that they can share with buyers that might raise a potential issue. But if we look at it from a buyer's perspective, when a newbie buyer runs away because they see a flood notation, that's an opportunity for a potential investor. If you can have a good look at the situation and realize that the house is not really at risk, you might be able to negotiate a significant discount on the purchase price on that property, where the majority of other people might run scared.
Yeah. So I think the insurance part's critical. Don't go unconditional on a property with a flood notation. You can confirm the insurance will be covered on the property, and then you'll feel a lot more comfortable about going ahead.
Absolutely. So finally, last segment for today, property managers face regulation. And this final segment for today, we've got some fantastic news for both landlords and tenants alike, in my opinion. Associate Minister of Housing, Tama Potaka, has announced a new government-backed framework to finally regulate residential property managers. And this is something that all of the property managers that we know have been asking for years.
Because there's a lot of sharks out there that should be regulated. So it's good for all the people that are already doing it. And obviously, those are the people that we associate with. So believe it or not, property management has been an unregulated industry in New Zealand for years. Anyone could set up a property management business and take control of millions of dollars worth of assets, tenant money, without any rules in place. That is finally coming to an end.
So the new regime will introduce a public register, allowing landlords and tenants to easily check if a property manager and their organisation are officially registered. The framework introduces minimum eligibility, training and experience requirements, along with clear standards for financial management and conduct. Crucially, the new law will require all client funds like rent and bonds to be held separately from the property management company's general business accounts.
Yeah, that's great. And the regime establishes a dedicated regulatory authority and independent disciplinary tribunal to handle these complaints, keep it transparent, and hold the bad operators accountable. So Minister Potaka described it as a light touch model designed to fit industry standards without overburdening the sector with unnecessary red tape.
Absolutely. And it'll lift the industry standards as well. So in our
And
opinion,
that's like what we do. We've lifted the industry standard by becoming licensed with the Financial Markets Authority to give advice, not just be a coach, because anybody can be a coach, call yourself a coach.
and at the moment, anyone can be a property manager.
Yes. So that's why we did that as well, to keep everybody pushing up.
And this whole regulation change is long overdue. Over the years, we've seen so many horror stories of boutique property management companies or private landlords even finding themselves in a situation where they've been managing other rental properties and then getting themselves into a situation where they end up going into liquidation. And if the rent was mixed in with business accounts, the landlords lost everything to those unscrupulous property managers. So mandating separate trust accounts for client funds is the most important part of this legislation, or at least one of the most important parts.
So what we need to remember is a well-functioning rental market relies on trust. If you're a landlord living in Auckland, but you have an investment property in, say, Christchurch, you're handing over a massive asset to a stranger. You need to know they're qualified, trained, and legally accountable.
So this literally levels that playing field. The great property management companies out there already operate with trust accounts, ongoing training, and high ethical standards. This new framework will force the cowboys out of the industry.
So it's great for tenants as well. Tenants need to know if their property manager is acting unlawfully. You don't want to give over a bond and they're pocketing that. And say ignoring major issues or mishandling bonds. It's clear that it's an independent disciplinary tribunal that they can go to say, I don't feel as though this person's doing the right thing.
And if you're currently using a property manager, this is a great prompt to ask them a few questions. Ask them if they already hold your funds in a separate audited trust account. If they don't, might be time to start looking for a new property manager before this legislation even hit.
So that wraps up a shorter one about episode 8 of the Property Investors Insights. We've covered the diverging rental markets, dangers of outdated council flood maps, and the new regulations coming in, which is much needed for property managers' accountability.
If this episode made you realize that you need a better handle on your cash flow, or you want help learning how to identify opportunities where other buyers get scared away, we'd love to help you on your journey.
We run free events online called How to Succeed with Property Investing. It's an incredibly valuable session where we go much deeper into how you can buy safely, manage your risks, and spot the real deals.
And it's completely free and online, as Paul said, so it doesn't matter where you live. There's no obligation. You can find the link in the show notes or go to propertyapprentice.co.nz.
Thanks for coming in and look forward to catching you guys soon.
See you soon. Hey there, want to stay on top of the latest property news and trends? Subscribe to the Property Apprentice podcast for weekly updates that will help you to navigate the market like a pro. We cover everything from insider tips to expert interviews, so you'll always be in the know. And don't forget to ring the bell and hit that subscribe button here on our YouTube channel for even more helpful content to boost your property journey. Check out the link in the description to subscribe to the podcast, and we'll see you in the next episode. Happy investing.